So let's get started. Welcome you all to the Management Committee meeting for November 10th. This is a meeting of the Management Committee. We are doing it virtually because the Metropolitan Council Chair determined it's not practical or prudent to conduct in-person meetings in response to the COVID-19 pandemic. Accordingly, committee members will participate in this meeting via telephone or other electronic means, and the meeting will be conducted under Minnesota Statutes 13D.021. We encourage you to monitor the meeting remotely. If you have any comments, we encourage members of the public to email us at public.info@met.state.mn.us, and we'll respond to your comments in a timely manner. So with that, can we call the roll to confirm we have quorum, please?
Barber.
Here.
Gonzalez. Johnson.
Here.
Lee.
Firmly here.
Lilligren.
Here.
Muse. Ferguson.
Here.
Thank you.
Thank you. Is there any changes to the agenda? All right, seeing none, we'll move on to approval of the minutes. Is there a motion to approve the minutes of our October 27th, 2021 meeting?
Moved by Barber.
Moved by Barber, seconded by Lee. Any discussion, changes? All right, seeing none, can we call the roll, please?
Barber.
Aye.
Johnson.
Aye.
Johnson. Oh, thank you. Lee.
Aye.
Lilligren.
Aye.
Ferguson.
Aye.
Thank you.
Thank you. Our first business item that we have is business item 2021-301, authorized financial institutions for 2022. Mark?
Thank you, Mr. Chair. Good afternoon, committee members. Mark Thompson, Senior Manager of Treasury, and I'm here to present the 2021-301 business item, authorized financial institutions for 2022. And this business item asks for approval of the list of authorized financial institutions you see in Appendix A. It's a list of financial institutions that will provide various banking, credit card related, and investment related services to the council in 2022. It's a list that provides, awareness and transparency around the council's financial partners. And in addition, our council's investment policy requires that all banks and investment firms receive prior approval before doing business with the council. And statute requires the council to designate official depositories. So we combine it all into one list for approval. The list is updated each fall and brought to by the Treasury Department, and it's brought to review by at the Investment Review Committee meeting, which happened yesterday. And then it's brought to this management committee and then to the council. So you see the list in Appendix A. I'm happy to answer questions on any of them you like. I'll quickly comment on the list is very similar to last year. There are only 3 changes. Under the credit card provider section, the Transit selected a new mobile ticket provider and payment processor called Token Transit. So that's a new addition that replaced previous providers, Mobile and Braintree. Human Resources, also under that same category, added a new flex payment administrator called Task, replacing Health Partners. And Treasury Department is now using US Bank for recognition cards. That's also under the card provider section, replacing Wells Fargo. So just quickly, I'll comment, the top categories are main banking providers. Then we've got a number of credit card providers that are, many of them are for transit and some are used by Treasury. Then the remaining categories, the custodian, the securities brokers, the money market funds, the OPEB trust investment area, and the certificate of deposits. Those are all investment related entities used by Treasury. And I won't walk through each one of them because there's a lot, but I'm happy to answer questions on those. The Thrive Lens analysis, competitive solicitation of financial services demonstrates stewardship over our financial activities by ensuring services are obtained at the best possible prices and according to procurement policies. And the funds invested with in our CD program positively impact equity in the communities we serve. These local community banks with whom we invest have track records of providing loans to disadvantaged small businesses, affordable housing initiatives, programs for the unbanked, and community development. And Mr. Chair, that concludes my comments on the list specifically. I also have a slide on some of our banking fees that I can go to now or after you take action on the list. It's up to you.
Go ahead, you can walk through them.
Oh, you've got the list up? Okay, there it is. This slide you're looking at has are some of the financial fees that are really based on volumes, transaction volumes, and we show this to the committee each year also. A few comments, I'll just kind of walk through them generally. We've got our general banking services. Yeah, we have a ton of different things that we do for our general banking. Our fees in 2021 are expected to be $93,000. Slightly higher than last year, but not materially different. These fees are offset by earnings credits on our deposits. So generally, they're fully covered by an earnings credit we get against our balances. So the merchant banking is our credit card transaction fees, mostly coming from transit. So it goes up and down with our ridership. You can see there was 439,000 transactions and the fees were 463,000. As a comparison, in 2020, the year before, there was about 10 million in transactions for $273,000 of fees. So 2021 is hot, jump up from last year. Pre-pandemic in 2019, these fees were at 680,000. So kind of up and down with the pandemic as expected. Purchasing cards, it's a negative number of 100,000 because we get a rebate when we use our purchase cards. That has been shrinking each year as a lot of our suppliers have chosen to be paid via ACH instead of purchasing cards. So that has declined quite a bit. It was over 200,000 a couple of years ago. And then the last three items generally don't change much. Our custody fees we pay for our custodian to hold our investment securities is pretty constant based on the value of our investments. And the trustee services stays is a small item, $2,000 a year, and as well as escrow services, $2,000 a year that we use for our flex payment program and for escrow services we might need for bond refundings. So that varies whether we do refundings or not. But so, Mr. Chair, that concludes my comments. I'm happy to answer any questions. The proposed action is the Metropolitan Council approve the list of authorized financial institutions for 2022.
Thank you, Mark. Any questions or comments on the list? Nope, seeing none, is there a motion to approve business item 2021-301, authorized financial institutions for 2022?
Lilligren moves approval.
It's moved
Johnson
by
seconds.
Moved by Lilligren, seconded by Johnson. Any other discussion? All right, seeing none, can we call the roll, please?
Barber.
Aye.
Gonzalez.
Aye.
There you are. Okay. Johnson.
Aye.
Lee.
Aye.
Lilligren.
Aye.
Muse.
Aye.
Ferguson.
Aye.
Thank you.
Thank you. Our second business item, we have two same week items, the first of which is 2021-309, same week, Oracle Support Annual Renewal. Craig?
Thank you so much for the opportunity. Today I have for you a 3-year contract in the amount of about $4.2 million for the ongoing support of our Oracle services. We use Oracle software in a lot of critical applications across the council, including in our financial and HR systems, as well as some of this technology underpins everything from our fare collection systems to our asset management systems. This renewal is being done through an MCUB, on which we have the benefit of continuing our partnership with, and it is for 3 years. It's highly favorable to the council, this renewal. It reduces our 3-year cost of ownership by about $1 million over those 3 years, which is atypical in negotiations with Oracle and something to be celebrated. The Thrive Lens analysis for this is that it allows us to continue to invest in our MCUB partners as well as support our operations for the council. The proposed action is that the Metropolitan Council authorize the regional administrator to negotiate and execute a contract with Collier, a vast computer company, and an Oracle Platinum partner to provide Oracle maintenance and support services in the amount not to exceed $4,153,776.19. Be happy to answer any questions.
Are there any questions about this business item? No? All right, seeing none, I do want to make just one comment. I think it's important to note that we are working hard to find MCUB vendors that are out there that are either on state contract or on other contracts and utilize those suppliers when we can. And so we should acknowledge those and probably continue to find, are there more out there that we can use that we're not aware of, right? So these are just great opportunities to have the entire contract be in essence an MCUB contract, as opposed to needing to set a 5 or 10 or 15% goal related to a contract. So these are very positive wins for us to be able to place these contracts. I had one question of Jody or Sai is on, or Ashanti, but so for a business like this, they win a $4.5 million contract. How long do they get to stay to be an MCUB if they win a couple of those, right? Isn't there a revenue limit for a lot of them?
Chair Ferguson, council members, I'm glad Ashanti, I saw him flip on his calendar. I know that there is a question with certification, and so I will volley it over to my colleague Ashanti to answer.
Thank you, Chair Ferguson, council members. There are size limits and revenue restrictions for certified small businesses. However, they are set by industry or NAICS code. So it'd be hard to say. Some are very, especially when you get into construction, they're very large. So it's hard to say if a couple of these would put this business over, and it is measured over a 3-year period as well.
Great. Well, we'll talk a little bit more about that later, but again, I just think it's as we're working hard to try to find ways to expand our usage of MCUBs, these are great ones to have. So are there any other comments, Mary?
Mr. Chair, I just wanted to acknowledge the great work of Craig and his team on this one. The savings, I don't think we've ever had an Oracle contract come back with savings. Much rather, we have increases year over year. And so just some fantastic work and creativity in how we renegotiated this contract. The reason that it's coming to you same week is it took all of that time to get it to a point where we were happy with it and bringing it forward. So great work, Craig. Thanks.
And so a contract like this where we're buying off the state contract, then it's just a negotiation at that point, because the overall pricing is in essence set, and we're just working on the details of how ours is sort of different from the state contract, or that how it works?
Craig, you want to go ahead and talk a little bit about the negotiation?
Yeah, absolutely. So, the state contract in this case sets a lot of the terms of the engagement and actually is favorable to us to use the state contract because it's such an existing contract. It has some valuable grandfathered terms that we took advantage of. But it also sets a minimum degrees of discounting. In our case, we've been able to materialize some concessions above and beyond the state contract's minimums, which have really allowed us to deliver the savings.
Great. All right. Any other comments? All right. Seeing none, is there a motion to approve business item 2021-309, same week for the Oracle support annual renewal?
Lilligren moves approval.
All right. Moved by Lilligren. Is there a second?
Second by Barber.
Seconded by Barber. Is there any other discussion? All right. Can we call the roll, please?
Barber,
Aye.
Gonzalez,
Aye.
Johnson,
Aye.
Lee,
Aye.
Lilligren,
Aye.
Musse,
Aye.
Ferguson.
Aye.
Thank you.
Motion carries. Our third business item and final business item for the day is 2021-277 JT, same week. Also, this is a November capital budget amendment. So we have Stuart providing us the summary.
Thank you, Mr. Chair, and good afternoon, members of the committee. I'm Stuart McMullen, Director of Budget and Operations, and I'm bringing forward the November 2021 Unified Budget Amendment. With me and available to answer questions are Heather Agason-Hebner and Ed Petrie, Finance Directors for MTS and Metro Transit, respectively. This amendment makes changes to the operating budget in MTS and the capital budget in MTS and Metro Transit. The proposed amendment was reviewed and approved by the Transportation Committee on November 8th. In the operating budget, this amendment accommodates the transfer of $1 million in MVEST funds from the MTS operating budget to the MTS capital budget, and $1 million in federal funds from the MTS capital budget to the MTS operating budget for 3 MVTA capital projects that MTS administers. Moving to the capital budget, the amendment adds to 2 projects in the Metro Transit capital budget. Most notably, it brings in $39.9 million from Ramsey County for the Purple Line BRT. As described earlier, the amendment also adjusts the funding sources for the 3 MVTA capital projects. These changes are detailed in Table 9 of the amendment. The amendment, if approved by the Management Committee, would be heard at tonight's full council meeting. The amendment is going to the council the same week due to the schedule of the committee and council meetings in November and around Thanksgiving, and the schedule to adopt the 2022 budget. The motion is that the Metropolitan Council authorizes the 2021 unified budget as amended and in accordance with the attached tables. With that, we'd be happy to answer any questions the committee might have.
Thank you. Are there any questions on the budget amendment? Nope. All right. Seeing none, can I get a motion to approve business item 2021-277 JT, same week, November capital budget amendment?
Moved by Barber.
Moved by Barber. Is there a second?
Second, Gonzalez.
Moved by Barber, seconded by Gonzalez. Any other comments? Discussion? All right, seeing none, can we call the roll, please?
Barber.
Aye.
Gonzalez,
Aye.
Johnson,
Aye.
Lee.
Aye.
Lilligren. Lilligren?
Aye.
Thank you. Musse,
Aye.
Ferguson.
Aye.
Thank
And
you.
motion carries. So we have 3 information items that we have on the agenda today. The first information item is our quarterly investment review report. Mark, it was have you do the sort of the 5-minute version of the presentation. Mark, if you're talking, we can't hear you.
There you go. How about that?
Better.
Thank you, Mr. Chair. This is a quarterly investment update to this committee. This was presented, this is a summary of what was presented to the Investment Review Committee yesterday. So I'm just going to quickly go through a few slides here to give you an update on the investment activities. I'll start with a couple comments on the economy, and then I'll move into the portfolios. You can go to the next slide, please. Just touching on a couple of the main themes that we saw during the third quarter. Inflation was a major concern, as you probably know. We're all aware of the supply constraints and labor shortages that are driving up prices. Pre-pandemic inflation was generally less than 2.5% for many, many years, but it shot up during the quarter. We saw September inflation was up to 5.4%. And actually this morning we got October's inflation numbers. The CPI, Consumer Price Index, was up to 6.2%, highest since 1990. So high inflation. These are year-over-year numbers, so they're a little bit inflated as they're being compared to 2020. But nevertheless, they're still concerning, and it's causing some concern at the Fed too, which we'll talk about in a moment. Slowing growth, the GDP in the third quarter was quite a bit lower. It was 2% compared to 6.7% in the second quarter. So the pace of growth has slowed. I think some of the reasons behind that are, of course, the Delta variant, the continued bottlenecks, and inflation might be hurting some consumption. So, which is, consumption is the biggest driver of GDP. So inflation is definitely having an effect there. And consumption was up just 1.6% in the third quarter, as compared to 12% in the second quarter. So the last item on this chart is the Federal Reserve taper announcement. You may have heard the Federal Reserve has kind of changed their policies, their monetary policy back when the pandemic started in March of 2020. They reduced interest rates to 0. And they started a bond purchasing program where monthly they were making purchases of longer term securities to try to inject some liquidity into the markets, in the economy. And because of high inflation, they have changed in their policy, and they're going to start removing some of that stimulus. They're going to taper their monthly asset purchases down till it's completely gone by mid-2022. So. And quickly, that's kind of a precursor to raising interest rates, is typically how the market views it. We'll see how that unfolds, but the market's now pricing in rate hikes in late 2022 or early 2023. So maybe some changes on the way. You can go to the next slide, please. This kind of shows you where interest rates are right now on U.S. Treasuries. The blue lines show the change in the third quarter, which was very small in the kind of intermediate sector. The dotted line was the end of the second quarter. The dotted blue line, the solid blue line, is the end of the third quarter. So we saw a slight increase during the third quarter, and the green line shows where they were at the end of October. So October, we saw a big jump in rates as the market started to price in these projected rate hikes, and yeah, so you can jump to the next slide. I'll quickly touch on the equity index, the S&P 500. The council has some exposure to the stock market in our OPEB trust that's managed by the state board. So this slide shows the S&P 500 over the last 5 quarters or so. as it's continued to climb record after record. Same in the third quarter, except for September. You can see September was not a good month in the stock market. We saw, a big decline as inflation fears crept in, and some large spending and tax plans were being debated in Congress, and there was a debt ceiling concern at that time. So there was a 5% decline in the S&P 500 in September. So that kind of wiped out a lot of the gains that we saw in July and August. And as we report third quarter numbers, you're going to see that effect of where we closed in September. But October, luckily, you can see it's rebounded. So going to the next slide, I'm going to jump into the portfolios and show you some details on those. Next slide. 3 portfolios. We have a short-term portfolio, a long-term, and our OPEB trust. And these show you the balances comparing the third quarter over the last 3 years. I'll kind of touch quickly on each one of them, so you can jump to the next slide. The short-term portfolio, this chart shows how it's allocated over the last few years by quarter. Nothing drastically different here. This portfolio is managed around the cash flow needs of the council. So it's very short term. Our longest maturity is about 7 months. So it's greatly affected by those short-term interest rates we saw in that yield chart a moment ago, where the Fed is still keeping the short-term rates pegged to 0. So the return on this is struggling. There's $960 million in this portfolio at the end of the quarter. And it's invested, as you can see, in money market funds, U.S. Treasury bills, and some U.S. agency discount notes. Not much change over the past 3 or 4 quarters, so nothing new there. I will quickly jump to the next slide, talk about the return. It outperformed its benchmark with a total return of 0.009%. So you can see what I'm talking about is we're close to 0 versus the index of 0.001. Average yield in the portfolio is 0.04. So, and you can see by the bars in this chart that, the total return has really dropped off significantly, especially since the Fed put rates at 0 back in March of 20. So next, I'll talk about the long-term portfolio. This is our longer-term reserves. There's $478 million in this portfolio, and it's generally intermediate-term investments. I think the longest maturing security we have is about 12 years, but our average maturity is about 3.5 years. We're kind of in those medium-term part of the curve you saw where rates have jumped up, which is good for this. It's allocated. This shows the allocation again. U.S. agencies in the green, U.S. Treasuries kind of in the purple are the biggest allocations. We do have our CD program in there in the orange, about 18 million, and tiny bit in money markets, which actually don't even show up in this chart, but and then municipal bonds kind of in that pinkish color. So not a lot different from last quarter, just a little more allocation to treasuries. And next slide, I'll talk about the total return for the portfolio. This portfolio also outperformed its benchmark for the quarter with a total return of 0.064% versus an index of 0.007%. So, as rates rose, even though it was slight during the quarter, there was some price depreciation on holdings, so the returns aren't very high. The average yield in this portfolio is around 1%, but because we're measuring total return, we have to take in changes in prices too. So as rates go higher, the value of our holdings will go down, our market value will go down, but we're buy and hold, so we're not recognizing any of those price declines. Lastly, I'll just touch on the OPEB trust. The third quarter return was 0.30%, which is much lower than we've seen for a long time. Underperformed the benchmark by just a tiny bit. There's a blended index we use that returned 0.369%. This, it's over the past 5 years. You can see it's returned 13.2%. So it's been a great performer. We have 60% at the end of the quarter. There was 67% equity in that S&P 500 index pool I mentioned. We've got 30% of the portfolio is allocated to Treasury and agency securities, and then 3% was to cash. And you can see if, don't panic when you see there's a decline in the size of the portfolio between June, the end of the second quarter and the end of the third. Not necessarily market losses or anything like that. We just withdrew about $13 million to pay some OPEB costs. So we're actually starting to use some of these assets to pay down some OPEB liabilities. So like I said, we've got an equity market that declined in September. So the returns on this portfolio were affected by that. So we've seen a jump back up. So the next quarter should look a lot different as far as the return on this portfolio. And that's all the questions I have. I know that was quick, or all the comments I have. I'll be happy to entertain any questions.
Mark, did we get a recent sort of actuary on the OPEB to know how much overfunded we are at this point, or is that coming up in the next little bit?
We did. We just received it on Friday, so we haven't gone through a new analysis yet to figure out if our OPEB allocation is still correct and what the funding levels are. But that's imminent. We just actually received it a few days ago. So,
okay. Any comments for or questions for Mark? All right. Seeing none. Thank you, Mark.
Thank you.
I get a double dose, so it's our next item that we have is the 2021 third quarter procurement summary and MCUB goals.
Good afternoon, Mr. Chair and committee members. My name is Jody Jacoby, and I'm the director of the procurement department. And I'm here today with my partners in the Office of Equal Opportunity, Cy Jordan, the director, and Ashanti Payne, assistant director. And we'll present the procurement summary report for third quarter of 2021. The expenditures policy authorizes the regional administrator to approve all awards not greater than $500,000 for the purchases of goods and services, and then construction awards not exceeding $2.5 million. This delegation was increased back in 2013. And then related to this increase, the council requested a procurement summary report. And the report, as you've seen in previous quarters, includes information by the procurement value and the procurement type. And this report has continued to evolve over the last few years to also include MCUB and DBE commitments, and then utilization by ethnicity. After the procurement summary, OEO staff will speak to the MCUB utilization. We'll just dig right into the information, starting on page 2, which is the procurement summary again for third quarter. In quarter 3, the cumulative spend was $101,699,859. And the number of transactions for third quarter was just under 8,900. And so lots of different and separate procurement events that could have taken place on a purchasing card, a purchase order. It could have been a request for quote, a request for a proposal, an invitation for bid, or a construction contract. That's what makes up those almost 8,900 individual purchasing events. And looking at this year's data compared to last year, third quarter, we had more purchasing transactions, almost, well, just a little more than 2,800 more events. It's been a really busy quarter. And then overall, our spend for third quarter last year was actually a bit higher. Last year, it was about $75,000 difference. The year-to-date spend for 2021 is also higher than 2020, where it was about $143 million more this year versus last year. The bottom of that page shows the procurements by transaction value. Again, very similar to previous quarters where 96% of the transactions were less than $10,000. And that's what's considered at the council a micro purchase, where there is no specific competition that's required. We can go right to a transaction with a P card or a purchase order based on a quote from a vendor. And lots of really fantastic opportunities to work with new vendors, including MCUB vendors in that type of spend range. And then the other pie chart on the bottom right is procurements by contract value, showing again pretty consistent that 77% of contracts that are more than $175,000. Just important for us to know that, to be able to watch the trends and assign the work to staff appropriately. Now, some specific contract successes or some specific projects to highlight for this quarter include a few projects. Again, this isn't a procurement success, it's a council-wide success building up from the fantastic collaboration with the Office of Equal Opportunity and the business units. There's two projects, 20P206, which was a bus shelter solar lighting, where the goal was 10% and the final commitment was 51%. Also, contract 21P184 for drainage repairs on an interchange bridge project where the goal was 9% and the final MCUB commitment was 18%. And so what I've tasked my team with is really looking at these projects and other projects where we're seeing success, and then asking them to be intentional and strategic with taking those pieces that we maybe had a process change or some sort of different engagement so we can replicate it. Craig's example earlier with the Oracle item business renewal is a really good example of doing something different, and we're continuing to look to replicating some of that success with staff and with our effort and our engagement to improve the process, because that's what we're responsible for, is that process. And so some of the things that my staff have indicated that they've done, again in collaboration with other business units, is on the projects that are formally advertised, they've mixed up the agenda. When there is a goal, they've really started with highlighting the importance of the goal to our bidders and to our proposers. And so that piece is emphasized. They've also worked on some guidance to bidders to help them understand what it means when they submit their good faith effort and provide some of their letters of intent. And then also thinking ahead to the next year, looking at the timing of projects. The more time we can give vendors to prepare for projects, especially with the upcoming construction season, there's going to be a lot more success if we get started early. In Q3, the MCUB Direct program, where they're MCUBs have the ability to have a micro purchase. Again, the management committee helped us with that. If you're using local funds and you have a purchase order with an MCUB vendor, you can go right to a purchase order with one quote up to $25,000. That's been just a really good incentive to try new vendors and encourage more different ways of thinking about the work and utilizing these vendors differently. And we're seeing a trend continuing to increase with MCUB vendors up to 17% versus 13% in the second quarter. So we continue to watch these specific trends with staff to be able to take advantage of some of those tools that we've worked really diligently to embed in the everyday process. Also, in third quarter, we implemented the 6% preference in bids and quotes, again to MCUBs where local funds are used. And there's a lot of work embedded in that, including reviewing and editing standard contract templates, and then working with communications and other partners and executives at the council to make sure that everyone understands this program, understands the process, and understands some of the important things that need to be done to be able to have that solicitation. And then also in third quarter, procurement was able to award an equity grant staff position to enhance some of the MCUB programs. Again, partner with the Office of Equal Opportunity with some individual meet and greets, and then ensure that as much as we can, we're including the right inputs. Again, to get that engagement and to get the process set to get these outcomes that you're seeing as the actual commitments on the report. Those are some of the high levels with the procurement summary. I'm happy to answer any specific questions. Otherwise, I'll turn it over to Cy Jordan.
Thank you, Jody. The Office of Equal Opportunity will continue in the presentation with Ashanti Payne, the Assistant Director, presenting on the numbers related to MCUB vendors.
Good afternoon, Chair, Council members. Ashanti Payne, Assistant Director with the Office of Equal Opportunity. And I am here to talk about our MCUB progress and progress towards our MCUB goal that we have established for 2021. And I am starting on page 11 of the presentation. And what I'd like to highlight is, yes, both our construction and goods and services is up, increased from Q2 to Q3. And however, our goods and services still remains to be below that 10% goal. Continue to do well in the realm of construction at 21.2%, and then of the 14% goal, and then 3.5% in goods and services towards a 10% goal. In terms of, again, how that compares to Q2, yes, we were still above the 14% construction goal, but we were only at 16% as compared to 21.2%, and then 3% in goods and services as compared to 3.5%. It is encouraging given that we had more overall spend in Q3 and those percentages did not go down, but again, wanting to get those goods and services numbers up. And on page 13, you see the breakdown of the divisions. One of the real things that I want to highlight on this division spend in terms of goods and services is, 3.5% seems a long way from 10%, but 7% doesn't seem that far, that there's some efforts that we can make to get that 10%. And Metro Transit's division was at 7% in terms of goods and services. No, it is not 10%, but I think there are some things that we can look to from Metro Transit, some things that they are doing that we can implement across all departments and divisions in terms of strategies, accountability, and efforts to achieve that goal. And then in terms of construction, our two divisions that really and that only perform construction, environmental services and Metro Transit. Both of them are, of course, exceeding the goal. Environmental services at 20.7% and Metro Transit at 24.7%, 14% goal. Lastly, or not lastly, but next, on page 15 is the breakdown in terms of disaggregated distribution. Really what jumps out here is that the spend with Black-owned businesses is definitely not only significant, but a significant increase from Q2. Q2, 93,000, and Q3, we had $676,000 worth of spend with Black-owned businesses.
Shanti, how many businesses are in that?
So for
is a lot going to just one, or is it a group of businesses?
Chair Ferguson, council members, yep, thanks for that question. I definitely looked at that, and the Black-owned business spend is representative of 14 unique businesses. Next, in terms of businesses owned by people of color, would be Asian-owned businesses, which would be representative of 10 unique businesses. Go ahead.
Of the 14, is there one that, let's say, has, because I know we had in one spend period, we had one particular business that did well. Is it 14 businesses each getting $50,000 a piece, or is there one that's getting $650,000 and 13 that are getting 1,000?
No, not in terms of the for Black-owned businesses. There's no real disproportionate. I think what is significant to us is that there were two businesses that had never done work with the council before previously that are added to that list that had significant spend, but nothing that one business was dominating most of that dollar value.
And is it ongoing spend? So we'll be able to continue to spend money with these businesses, or is it more one-time kind of things?
Well, if based on the trends, this has not been. This is something new for us. We haven't seen this before. For normally Black-owned businesses have the least amount of spend. So this is something that I think what it points to is, we know that that's been part of our inequities, so to speak. So focusing in our outreach and making those connections with that community, I think makes a difference. So we hope that our efforts and our strategies relative to outreach, that we can sustain this, but also not see drops for other categories and businesses owned by people of color as well. And then on the last page, I just want to point to some of the highlights that we identified in the quarter. We had an HVAC information session that we partnered with procurement and the business units to put on. Engineering and facilities and Metro Transit, and then environmental services. We definitely see that event as a success. However, we do want to see more businesses owned by people of color in attendance at those events, especially given the feedback and response that we got from both the businesses and the business unit. And the business units are asking for more events like this in other scopes of work, such as plumbing and other areas. They were able to talk about upcoming projects where they pulled out specific scopes to increase MCUP participation. And we're able to make that direct connection and outreach and let them know that these are upcoming opportunities to prepare for. And again, we got tremendous feedback from the businesses and the business units from this event. Robert Street Front Desk Project, MCUBs utilized totaling $26,000. We had an MCES equipment purchase where we purchased from an MCUB vendor for $71,000. And then the micro purchase report that procurement provides, Q3 we had $514,000, which is a $14,000 uptick from Q2. And then also we have the MCUB preference program that has just been initiated. And then also our PeopleSoft supplier onboarding that's being led by procurement with support from OEO and others that will really allow us to track not only certified small businesses, but also businesses owned by people of color that we do business with that may not be certified as well. And with that, I'll end and see if there's any questions for OEO or procurement.
Are there any questions from council members? Councilmember Lee.
Thanks, Mr. Chair. Yeah, I think my question is for Jody. Jody, you mentioned that our staff persons are having kind of one-on-ones or meet and greets with folks, and I was wondering, what is the nature of these conversations? Are we addressing people's experiences doing business with us, addressing barriers to entry and best practices, and if we can learn more about what these conversations are like. Thanks.
Yeah. Chair Ferguson, Councilmember Lee, procurement has definitely been a partner along with the Office of Equal Opportunity and the specific project managers and units with some of these MCUB vendors to provide a gateway to help understand not only what are some of the things that we buy, what is the process generally, who are some of the staff, an ability to ask questions in a non-bidding environment and really open up an opportunity for more of a free flow exchange. And I would say that each meeting is a little bit different depending on some of the interests of the vendors, but they've been, in my opinion, and what I've heard, very, very successful. And as Ashanti also mentioned, we just got a request yesterday from Environmental Services looking to do some more proactive engagement and outreach before they go out for a solicitation. So I think they've been very successful, and we're learning and then also retooling some of our solicitation documents, retooling some of our engagement, and making sure that our process is as flexible as it can be. I hope that answered your question.
Yeah, it did. Thanks.
Mm-hmm.
Other questions? We'd at one point, Jody, we talked about having in the RFP process, having a sort of an equity piece of the scoring. So instead of necessarily having a goal, it would sort of be 10 or whatever, 20 points out of the 100 would go to just what do you do around, equity, right? Whether it's suppliers, whether it's employees, whether it's whatever you would do. How are we doing on that? And in particular thinking about sort of RFP coming up around banking and some of these other ones that that we're doing, and how could we use some of that where we wouldn't have a goal normally, but we could still get companies that might be willing to make commitments around equity as part of that process.
Yeah, good question, Mr. Chair and council members. I believe that they're just finalizing some of that equity criteria in the evaluation with requests for proposals. Cost is one of the factors. It's typically cost, qualifications, experience, and price. But adding in that equity component where we're asking some of the proposers, tell us what we don't know. Tell us how you can add inclusion and embed equity in your proposal. And then as a result of that, you will be scored appropriately. We don't do points at the council, but we do have definitely criteria, and it's a balance of those things. But having a different way to really go out to the market and ask them how they can embed equity, knowing the work, and then also containing that in their score, because the equity is important to us. And so that's going to be scored as well in comparison, not only with their proposal, with the other proposals that the team is reviewing.
And just remind me again what's in the exclusions bucket.
Mr. Chair, committee members, I can say a few of them. Some of them are sole sources, like legal settlements, easements, some of the non-negotiable things. I'm looking at you, Ashanti. I don't know if you can see my eyes. Maybe you can take over from that as well.
Because I'm just looking at it, it says these are all things that are either PO or P card, right? So is a legal settlement done by PO or P card?
Mr. Chair, council members, it's done by a check requisition, so an actual check.
So that, okay. So just, again, it says there's two components, right? So we're trying to get to 10% of only 25% of our budget, or 20% of our actual spend, right? So that would be the other piece over time, is hopefully including more in the inclusion. So we have a sole source contract we just bought under in the earlier part of the meeting. So that would be excluded in the exclusions bucket, but we're getting credit for the MCUP spend.
Mr. Chair, council members, that was a cooperative procurement venture through the state of Minnesota, so that would not be considered an exclusion.
Okay. So it's just more, how do we get more of those sole source, so-called sole source, where we have, some MCUB or different options available. And that might be working with some of our state partners who are putting people on those contracts and making sure that they're, given it's a large share of the dollars, making sure they're thinking creatively around who do they include in those contracts. Good. Any other comments, questions? All right, seeing none, does somebody have a motion for me?
Yes, Mr. Chair, I move to close this meeting under section 13D.03 subdivision 1 of Minnesota statutes, so we can consider a labor development and negotiation related to labor strategies.
Is there a second to close the meeting?
Lilligren second.
Seconded by Lilligren. And this is just in discussion. So governing body of a public employer by majority vote of the public meeting can decide to close the meeting under section 13D.03 subdivision 1B of Minnesota statutes. The discussions under the closed meeting can be confined to labor negotiation strategies, developments, and or discussions and reviews of labor proposals. The proceedings of the meeting closed under labor law will be tape recorded, preserved for 2 years, and made available to the public as provided by law. Can we call a roll call to close the meeting, please?
Barber.
Aye.
Gonzalez. Johnson.
Aye.
Lee,
Aye.
Lilligren,
Aye.
Musse,
Aye.
Ferguson.
Aye.
Thank you.
Gonzalez, aye.
Thank you.
Thank you. And the motion carries. Before we close the meeting,